Growth or value investing? And is there even something in between? We're going to look into this in today's video, and we also have a couple of companies that we talk about that sits in each of these investment categories. Starting with growth investing. Growth investing is a way of investing in companies that have a high growth potential and that have a very high growth over the last couple of years. High growth means at least 15% or more of revenue growth each year. And that are very often young companies, smaller companies, companies from the technology industry. And a growth investor is really just looking for that nice revenue growth of a company that can be 15, 20, or sometimes even 100% per year if it's a young company. And a growth investor would not look so much for a price per earnings ratio, so PE ratio, or even if the company would pay a dividend, which is usually not the case. And on the other hand, a value investor would pretty much look exactly for those things. So they would try to invest for longer term. They would invest in companies that have a very stable income, and they even would pay out a dividend and have a not too high price per earnings ratio. So you and how do you make money from those type of investments? So for a growth company, you make money if the price of the company appreciates. So basically with the stock price growth. So when you see a price chart that goes up, and the company is reporting revenue growth, this is certainly a company that would fall into that category. And some companies that sit there are something like Facebook, Netflix, Amazon, and newer companies like Zoom, or in the past a company like GoPro that was certainly in that area. They did not make a profit at that time, and companies that are not actually making a profit and paying out their profits to shareholders, but showing that in appreciation of the share price. And you can profit from that if you buy companies and sell them at a later point when the price is higher. For value investors, on the other hand, very often you don't see that the price of a stock actually goes up that much. Sometimes it does, but sometimes it doesn't. But you earn your money from the earnings that get paid out from that company, so from the dividend that a company is paying out, and that on a yearly basis. So very likely you would hold stocks that you buy for long term, for many years, and you would receive your dividend over and over again every year. And this is how you make money with this type of investment. This would be a company very likely in the bank sector or in the resources sector, so oil, gas, and materials. Or sometimes even insurance companies that sit in that sector, and that would be called value investment. And there is something in between. Companies that do pay a little bit of their earnings, pay out a little bit of their earnings, but also that still are able to grow their business quite heavily. And so those companies sit really in between growth and value investing. And some examples here are Apple or companies like Visa, and that those companies are still growing quite strongly, but they are starting to pay out a dividend. And for Visa, for example, in the last 5-6 years, the dividend actually has doubled in terms of the amount that the dividend paid, and also the share price has gone up quite significantly. So And what type of investor am I? I'm certainly an investor that does both. So I have investment that are growth investment. I have investment that are value investing. And I think doing both can actually be a smart move, but it is really depending on your personal risk tolerance. And I want to point out again that all the companies that I named, none of those investment and companies are recommendations from me. You need to do your own research, and I do not hold a financial services license. So make sure you do your own research before you invest if any of those companies or in any other company by that matter, before you actually put your money into those companies. And yeah, what should you now decide to go for? And I just mentioned it already. It is really depending on how quickly you want to, or how for the period of time you want to have your investment in the markets, and what your investment goals are. And depending on your investment goals, you should look into the companies that are either growth companies or value related companies, so value investment as in the sense that we just talked about. I hope this video was helpful to you determine in what type of investments you can and should make. Once again, thank you for watching, and do not forget to subscribe to my channel if you like what you see, and give the video a thumbs up. See you in the next one. Bye.